Hello traders, Gary Wagner here, just about 10:45 in Honolulu, 3:45 in New York on Monday, February 29th, leap year, leap day, 2016, and this is the daily report for gold and silver. We have a nice rally underway in the precious metals markets. Gold trading up roughly 1 4/10%, $17 in terms of the net rise. We're looking at gold prices trading just below 1240 at 1239.09. The low has been 1215 on the day and the high 1240.16. So we're just a couple of points off of the high on the day. So traders, absolutely no doubt, we've got a nice rally underway up about $17, trading up near the highs at about 1239, 1240. That's the highs on the day. Now, the chart that we're looking at is a daily chart. This is the chart we have been really putting our latest long-term count in terms of our Elliott wave count, but I've also just added a simple fib retracement. Now, what I want to do on this fib retracement is look at the relationship between this high up at 1435, that's right here, and the most recent lows that are down at around 1043. When we do that, we get a fib retracement from this point, and we get different levels of importance, and they will help us plot current levels of support and resistance. So, for example, when we move up about 38% of this retracement, it takes us to about 1192, which is right in here, just below 1200, and it is a area that I am looking at currently as having some major support in the market. Now, we talked about this a little bit last week, but I believe that we have a minor level of support roughly at about where we are right now, which is 1239, 1240. Let's draw this line across and you can see that we've had these series of tops that have come in, and up till now we've not genuinely seen the ability to break through that. Now, we're moving on new highs right now as we talk at about 1240, but the key is this. My sense is that, and let's go ahead and kind of blow this up and position it a little bit better so you can see, but my belief right now is that at some point we will take out this level of resistance. If not, that's where I was looking at a potential top in the market, but the real level that we want to see taken out is 1285. Now, that's a 61% retracement, and just above that, of course, we've got this particular top right here, which sits in roughly at, I believe, at around 1300. Here's our 1300 mark right here. So in terms of real resistance in the market, I'm currently pegging it between 1285 and 1300, and it is based upon really this fib number of a 61% retracement. Again, it's a 61% retracement of 1435 down to 1040. So traders, want to take a quick look at the dollar and how that is influencing the current price of gold. As you know, we trade in dollars, and so it's not so much that it's sensitive, but strong US dollar, of course, puts pressure to the downside on gold. When this dollar really sold off dramatically about 4 weeks back, this being our weekly chart in the dollar, of course, that was part and parcel of what we saw when gold began to pop up. It was a great positive effect. Now, today, a strengthening dollar is taking away about $1. So call it, in essence, unchanged on the day, $19 in normal buying. So you've got a real strong dollar right now. But the other interesting thing is crude, because we had the equities markets, which were trading positive for the better part of the morning session. Look at the high, 16,726, couple hundred points from our current status, which is putting it down about 98 points at 16,540. And when we look at crude oil, also, crude oil is interesting, and that is up about 3% on the day at 33.87. And even with a stronger oil market, we've got some selling in the U.S. equities markets. S&P also trading lower on the day. That's off about 0.5% at 1934, 1933. Traders, we recommend highly that you maintain your current long position in gold at 1217. Our stops are under 1200, but they will get raised either later on today or tomorrow. That will come out as a special notification or a trade alert, or be attached to the daily notification letter. It just really is going to be a matter of picking a particular spot that we want to put our stop in gold, now that we have some really nice profits on the trade. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.